Hi, my name is Wyatt, and this is my budget and forecast assumptions packed project. So, I am a student at the University of Toronto studying finance and economics. My target career path is either a financial data analyst or quantitative analyst because I enjoy using data, statistics, and financial markets to solve complex problems and support decision making. So, for my starting point, I already had a foundation in finance through coursework in financial markets, investments, and economics, along with experience using data analysis and quantitative reasoning. However, I wanted more practice applying these skills in a realistic business context. This project helped me bridge the gap between theoretical finance and real world forecasting and scenario analysis. So for my project overview, I created a budget and forecast assumptions pack for algorithmic trading using Exchange Street as the analysis context. The objective was to develop a 3-year forecast and evaluate how different market conditions could impact performance. I started by identifying the key assumptions that drive an algorithmic trading firm's profitability. These included growth in electronic trading volumes, market volatility, technology investment, and research and development spending and operating costs. So for my base case, it assumed approximately 7% annual growth in electronic trading volumes and 10% annual growth in net trading revenue. This was based on continued expansion of electronic markets, increased ETF trading activity, and Jane Street's strong position as a leading liquidity provider. I then built upside and downside scenarios. In the upside scenario, higher market volatility and increased trading activity led to faster volume growth of roughly 10 to 12% annually. More trading opportunities and stronger order flow resulted in higher revenue growth and profitability. In the downside scenario, lower market volatility compressed spreads and reduced trading opportunities. Revenue growth slowed significantly, despite Jane Street maintaining its competitive position. After comparing scenarios, I identified market volatility as the most important driver because that directly influences trading volume, spread capture, and overall market activity. Finally, I use these forecasts to evaluate strategic decisions. The analysis suggested that continued investment in technology infrastructure and quantitative research would be more valuable than focusing solely on cost reductions, because maintaining a competitive edge is critical for long-term profitability. So now for my finance reasoning. Behind the project was based on understanding how market making and algorithmic trading firms generate value. Unlike traditional companies that rely on a product sale, firms like Jane Street depend on trading opportunities created by market activity. As a result, revenue is highly sensitive to volatility and liquidity conditions. I use scenario analysis to evaluate how changes in these drivers affect profitability and risk. This approach helped demonstrate how forecasting can support strategic planning under an uncertainty, which is an important part of both financial analysis and quantitative decision making. So finally, for my career evidence, this project serves as a strong evidence for my resume, interviews, and future applications because it demonstrates financial forecasting, scenario analysis, data-driven decision making, and market understanding. It also shows my ability to connect quantitative assumptions to business outcomes, which is highly relevant for financial data analyst and quantitative analyst roles. Thank you so much for listening, and that's it for me.